Afternoon, everybody. Welcome to your weekend edition. It is Friday, December 9th today, World Cup Day. Yes, I guess since it is Friday, I should don the glass of whiskey. Jefferson's Ocean here, which, by the way, is a whiskey that is it's matured in oak casks on boats that travel around the world. Kind of a weird whiskey. Anyway, delicious. Cheers to Croatia and to Argentina, both just phenomenal days. If anybody here is a soccer fan, just awesome soccer today. So cheers to them. I was pulling for the Dutch, but, can't win them all. Anyway, I look forward to the future rounds. Good day all around. Now let's talk about Trading World. Obviously, today's topic is Trading Week wrap-up. I figured it'd be fun to have the World Cup in the background here. I'm trying to find pictures where it actually looks like it was sitting at the venue. Unfortunately, I was not sitting at the venue in Qatar, but maybe one of these years I will. So let's start off with kind of big picture and look at what's been happening today. My chart's going to look a little bit weird because it's contract rollover, and you'll see where the data doesn't quite look right. So I'm going to start things off kind of at the bottom here. You can see the Russell future showing down 1.24%, but you look at IWM, going to be just about the same. The S&P was off from the other numbers I was looking at, but all in all, it kind of surprised me the way that these markets finished today. When you look at the inside market, meaning let's rip open a 5-minute chart, it was really kind of calm and traversing sideways. Most of the data this week was actually pretty darn good, except for our PPI number that came out. That was kind of that was not a good one. Let's see, let me close this out. Something's happened on my stream here. Hopefully everything is still going well on the stream. Look kind of weird. Audio streams bitrate 0, lower than needed. Okay, that's weird. It shows I'm having issues with my stream, which is bizarre. But anyway, let's keep going. As you guys know, I have some long positions. I actually am long financials with the XLF. I'm long QQQ. And today, kind of thought things would be all right. We kind of weathered the storm of here's the triple Qs. We weathered the storm early on. This was like the big sell-off when that PPI number came out today. Or sorry, CPI number came out today, which was slightly higher than expected. I'll show you that one right here. Actually, it was PPI. See, they usually do CPI first, but for some reason this week they did PPI first and CPI is next week, so kind of strange to see why they reversed them like that. But you notice that they're expecting the PPI number to be 0.2%, a decline from the 0.3 we saw the previous month, and we actually came out at 0.3%. Now, to me, this doesn't really, I don't think it's that big of a deal. As long as we're under 0.5, I think the market is kind of feeling like we'll be okay with regards to inflation. So the 0.3% really was not that big of a deal. I don't think it has much impact on what Jerome Powell's decision is going to be. And as I'd mentioned many times, one of my favorite things to look at is the FOMC Fed Funds futures, just to see, did this have an impact today? And as you'll notice, we're at 77%. So it's a slight change. It was 79 yesterday. Actually, a couple days ago it was 79. Now we're at 77%. So we'll probably still see 50 basis points. The question is, does this change the future meeting? Meaning not the December one, which is next week, but the one on February 1st. And we can look here. You see 3 possibilities from this specific point, and we didn't get much rate change there either. So even though we had a PPI number today that was slightly worse than expectations, really not that big of a deal. And I thought we would shrug this off and continue to rally. I actually kind of anticipated this being more of a bullish day, but right near that last part of the market, last hour or so, really just fell apart on all these indexes. You can see that there for the Russell. Same thing here for the Dow, which just really cratered near the end. S&P is the same, and of course, NASDAQ, all these indexes looking just the same. Now, the good news is we didn't break the lows from that initial sell-off that happened pre-market, right? When you have this initial PPI release, there was a huge spike down. To me, there is a psychological purpose to that point. I know a lot of people don't like to look at Globex sessions or after-hours trading. I do for situations like this. When you have an event like PPI numbers come out and you get this knee-jerk reaction that really spikes things down, I will look at that and potentially try to use that as a demand zone for trading during the day. Good news is we didn't come back down to it, but as we go into the weekend, it's certainly ending the day on a fairly negative note. And as you look at the week here, it was nice to have that nice big pop-up yesterday, but still not so great. I was watching the after-hours session yesterday, really liking a nice gap up in the NASDAQ, but it just gave it all back and really not looking that strong. So not the most exciting finish of the week that I was looking for, especially after this huge move to the south side. If you're looking for the end of the week numbers, well, we'll just give you a rough ballpark. We're looking at down about 3.22% for the S&P or for the NASDAQ, and all these markets really struggling a bit overall for the week. Now, here is some of the data that we mentioned today, which I already showed you. All right, so here you have the economic announcements. I didn't put anything on here for earnings because I didn't see anything great with regards to earnings front today. So I'm going to go to a couple questions here that were sent in at the YouTube channel. So, of course, anybody has questions, you can put those down below the YouTube channel. I always look at those, and I'll throw them into the presentation here. Or you can email me at TraderMerlin@gmail.com, and let's start there with a couple of questions to begin with. This is a topic that a lot of people have been asking me about because I mentioned that I did go long on XLE, which of course has been down pretty good over the past couple of days. And the question probably for many people is why. So here's the question that came in from Chris. Says, can you offer your thoughts on the $60 cap on Russian oil? Sure. Let me ask you guys, do you think that this is important? Do you think it's a big deal? Do you think it makes a difference? Just the $60 cap that the 7 major countries are putting on Russian oil, do you think it really matters? Let me ask you that. It's interesting because when you look around the world and type it in a chat, I'm stalling here with conversation to see what you guys type in. If you look at oil around the world, oil is not oil. I mean, there's different grades and qualities of oil that comes out of the ground. There's several different qualities, and each one of those has a specific refining process and could be much easier to refine, much more complicated to refine, much easier to extract, and there's different prices for those. So when people heard that there's a $60 cap on Russian oil, a lot of people looked immediately at this crude oil chart and said, oh my God. When that happened was earlier this week. It's like, oh, well, crude oil's at $80. That means this thing's going to fall to $60. This is all grandstanding. And everybody that's responded so far, thank you, Vernon, Randon, Chris, and Thomasina. No, this is not a big deal at all. And I had a chart here. Let me see if I can find this chart. Unfortunately, I apologize. I'm not as prepared as I normally am. Main reason being I was watching the World Cup today, and I got a little bit too excited. So we look here. This is obviously crude oil. We can actually go back, and let me see if I can find you a better chart of oil prices. And I'll go right here. These are all different qualities and grades of oil. Now, it's kind of hard to see. I understand that, so I'll zoom in here a little bit. You've got West Texas Intermediate, you got Brent, you got M-Urban, you've got, and that's pretty much it. You do have some other ones here, OPEC Basket, Bonnie Light, but there's different qualities. And what's interesting is when you look at the Russian oil, here is the price of Russian oil, and this is going back over the past few days. So I personally think this is a joke. If you really want to hit Russia, don't put a cap at what the current price was. So that announcement for the cap, I believe, came out, Monday, Tuesday, somewhere in here. Russian oil was trading at $63 that day. Oh wow, you're really sticking it to them here by putting a cap on it. I mean, right today it's trading at $54. So Russia's probably sitting back going, hey, go ahead and put a cap on our oil. We don't mind. No big deal. I don't know. I just thought it was kind of stupid. Now, if you really want to handcuff Russia, you look at this chart over here and you say, hey, listen, you're currently trading at $60. Okay, our cap's going to be 40. Now you're doing some damage. I just thought that this was kind of stupid. They were already pretty much trading at it. It's kind of like somebody saying, let's say, for example, I'm selling a shot of whiskey, right? I'm a bar owner and I'm selling whiskey. And all the patrons in town start protesting because of the price of my whiskey, or they don't like my business and they're trying to stick it to my business. And I sell my shot of whiskey for $10, right? $10 for a nice glass of whiskey, and you get the square ice cube. Well, my patrons get all upset and they're like, oh man, we don't like that place. $10 is ridiculous. They're bad people that are owners of that bar. We're only going to pay $9.95 for that glass of whiskey. And me as the bar owner is like, okay, oh wow, you're screwing me out of a nickel. Okay. But if they said, hey, we're not going to pay more than $5 for that glass of whiskey, my business will probably suffer and I'll get hurt. To me, Russia's got to be laughing, going, are they really that stupid? I mean, really that dumb? And I actually went long on oil with the expectation that if these 7 countries are going to play that game with Russia, then Russia's going to be like, oh, really? You're going to put caps on us? And he did say this, Putin said, that any of the countries that put a cap on our oil, we will not ship any oil to you. That could hurt a lot more people than saying, hey, we're not going to pay more than 60. It's either, oh, we're not going to pay more than 60 or you get nothing at all. And to me, that would start much more conflict, which is why I went long on XLE. I figured that this would have actually had the opposite effect. I actually thought this would spike oil because it now looks like Russia might play even more serious stuff. So I'm wrong on that one, at least for right now. I see the price of oil has been dropping pretty significantly, and it's down. I think we're down 23% just in the past couple weeks. Let me show you right here. This is crude oil anyway. Going from the peak we have on November 7th, so really not that long ago, call it a month, 23.5% slide for the month. Just a tremendous decline, and this may also at some point start to really impact our inflation data, which I'm sure politicians love it. Yes, OXLE, yeah, it's been a pretty ugly few days. Good news is I'm not at my stop loss yet, but I'm getting pretty damn close on this one. So, Alex, have I seen people making money out of stock for a living? Absolutely. Absolutely I have. I know a lot of people that make a great living trading stocks, ETFs. I put ETFs in the stock category just because it's traded on the same exchanges. Absolutely. I've also seen a lot of people that lose, right? No, I didn't. Chris asked if I went long on MLCF. No, I didn't go long on the futures market. Just using XLE as more of a basket to hedge across a bunch of different companies. Let's see. Now that I got that, not while Venezuela still has gold, they are still trading partners. Yes, and this is creating a lot more interesting pieces. So if you look at this issue with Russia, I think Russia is basically giving the middle finger to the rest of the globe and saying, screw you, 7 countries that want to put a cap on our oil. We've got China right here, and China will buy all of our oil if they need to. And I think that was an important one. But Xi Jinping was in Saudi Arabia today, or might have been the last couple days, but he was going through Saudi Arabia, which really may not be a good thing for Russia. If you're really thinking that your backstop for your oil is going to be China, and China is now, working some kind of deal with Saudi Arabia, that may not be good and may create even some tensions over on that part of the world. So let's finally get maybe U.S. out of the mix and let's keep it over at China and Russia. That'd be kind of interesting. So let's see. Looks like XLE at the over underline. Yeah, XLE is not looking good. Today's action really kind of shot me a little bit. Good news is I have a bit more to go. My stop loss is actually down below 78. So you can see that there's a little area of congestion that we had back here. So I have a substantial amount of risk on this trade, but I'm not overly worried about it. Remember, I also have all the way out until May, but I have a specific deadline where I have to roll those options out and just swallow the loss and call it a day. But at least I'll be able to sell some of the time back. Joe says, CL is in a daily demand zone now. Well, let's go to the CL chart. Where did my CL go? Oh, I'm up in commodities. Here is CL. So if you zoom out just a little bit, you'll notice there are a lot of zones over here that go back into late 2021. And yeah, that's part of it, is I think you are coming down into some of these areas of demand. Come on, show me the whole chart. They changed the settings on this. 1 second. I don't like that they put labels off that side. Positions, where is it? Appearance. I don't like that it has the name of the. Great. Not going to show me titles. No values. Damn it. That's on that one. There we go. Symbol name. There we go. That makes it better for me. So. You notice that the way this has come down real aggressively, it's come right back into these lows that go back to right around December 20th of last year, and also you have a couple levels lower than that, but not worried so much about that at this point. We'll see if we get any reaction and maybe some bounce. There's West Texas Intermediate, there's Brent, and then there's the Ural is the Russian one, so that's the specific type of oil there. So I had it up here. It's called Urals Europe CFR, and that's your... That's the one that Russia has. So there are different prices out there, but the predominant one are going to be Brent and West Texas Intermediate. But you can see here, it's M Urban, which I'm not familiar with, but there's different types here. And then this is kind of breaking down specific ones, Louisiana Light, Bonnie Light, OPEC Basket. So there are different gradients of oil as well. But I'm pretty much, I'll trade West Texas Intermediate. That's pretty much the one that I'm trading in all my trades I do. So you CL right now is that West Texas Intermediate. So there we go. Let's see. Why call it a cap? And most likely they are dropping prices to move it to a given the restrictions. I don't know why. It's funny, when they made that announcement, I was kind of shaking my head going, well, first off, you're saying, I'm not going to pay more than this much for your goods or services. Well, this is basic economics. If you don't want to pay more than a certain amount for a specific goods or service, it's up to the person selling it to you to say, okay, fine, I'll find somewhere else. And if the buyers walk away in such quantity that it actually ultimately impacts the person selling that item, then they can lower their price. Fine. But supply and demand will dictate really what the price of oil is. And if price of oil gets really, really high, Russia's going to stand back and go, yeah, we're not selling it at 60. It's going to be 90, 100, whatever the price may be at that moment in time. It's Friday. Did I mention it's Friday? Cheers, everybody. Hope you're having had a fantastic week. Heard Russia has old, refurbished, and leased vessels to store and ship. Yeah, I don't know about that. I know that part of the cap is that the insurance and the shipping, they're required to fill out documentation about what price was paid for specific amounts of oil. And if anything is over that, they will lose that insurance because most of the insurance companies are based in those 7 countries that have imposed the cap. So let's say, for example, and this is not actual, I'm just making this example. Let's say Progressive, right? It's not Progressive, but let's say Progressive is the company that's insuring freight tankers. And since U.S. is part of the group that's saying, hey, we'll put a cap on that oil at $60, if Progressive was to insure a vessel that was carrying oil that was more than $60, there's recourse from the government entities against Progressive. So Progressive can go, no, we're not touching that one. So that's how they're getting to impose this stuff. But honestly, how the heck are you going to enforce it? I don't know. I think it's all political grandstanding, showboating. It's kind of silly in my opinion. But it is what it is. When I heard they were capping at 60, I just looked at the Ural's oil price and I went, it's already at 60. Wow, you're really doing them a disservice. So that was probably the biggest piece for the week. I think the follow-up here is, what does Putin do? Does he just kind of sit back and laugh it off as I would? Like, seriously, I'd be laughing at these 7 countries going, man, my oil is already at that price. How can you really make a big deal about this? Or Putin, who, some people say is just a radical sociopath, maybe he does come back. And, there were some comments made about nuclear weapons again and nuclear attacks. It's like, okay, let's not go over there. It's oil. All right, I'll go to electric vehicles and call it a day. Let's see. They're not stupid. They won't put a real cap because they want their cut too. Yeah, I totally agree. All right. So that was the first piece, Chris. My thoughts on it are it's a joke. I think it's comical. At first glance, people who don't know about the types of oil. So your average person, like when you go to Christmas dinner with your family and friends and people go, oh man, they're going to cap Russian oil at $60, man. It's trading at 72, I heard. No, that's West Texas Intermediate. Urals is trading at 54 right now, so big deal. All right, let's see what else do I have here from a listener question perspective. Oh, I like this one. I get these questions all the time, and I want to get your take on it. I'm going to type into chat here. Let me see if I can get a poll going. It always is tough for me to do these polls. Right a second. Would you? And you don't have to answer yet. Actually, I won't send it yet, but I'm going to type it in. Would you? All right, so I'm going to put this right here, and I'm going to leave it there until I get this question. So the question is from Adam, and Adam and others. Thank you for the questions. I love it because it helps steer the show. Would you buy Carvana after this sell-off? So Carvana, I don't know if anybody here has seen it. Is it CRV? It's CARV. There you go. CVNA. I always forget the ticker symbol. Look, Carvana, I don't actually know why this stock was as rich as it was. I mean, this thing was trading up over $375 per share, and here we are now trading at $5, actually sub 5 in the after-hours session. And as if that wasn't remarkable enough, just look at where it's come since September, the middle of September, like literally 3 months ago, you had Carvana trading at $42, and here we are at 5. I mean, that is an unbelievable slide. Now, I pass by a Carvana on a regular basis. There's one down the street here. To look at the actual loss just since September for Carvana is an 88% slide. So for those of you bad-mouthing Bitcoin and saying, hey, Bitcoin's a scam, it's down 80%. Well, it's down 80% in over a year, and it's happened 4 times already with Bitcoin. Carvana looks like it's dead in the water. So let me ask you this. There you go. I sent it to the chat, and I'll see if you guys like it. so many people look at price charts like this, and this is just such a common human instinct, right? There's that old phrase, well, if you liked it at 40, you'll love it at 20, and you'll really like it down there at 10. So I'm looking at this price chart. It looks awful. You guys know what my take would be on this one, which is basically the trend is your friend to the bend at the end. This thing just keeps getting weaker and weaker and weaker. Now, I've got 100% of you so far have said no. If you're just sitting on the sidelines, hit that survey button. I'm curious. And be honest, would you buy it? It's at $5. It's a vending machine car company. Yeah, it's kind of a cool model. Jamie says, automobile vending machines, after you own the car, who cares where it came from? That's true. Yeah, I don't think I actually think it's kind of cool. The one down here, there's one going up the 405 in Southern California off the left-hand side if you go north on the 405. Kind of by Long Beach, I think, maybe a little bit before that. And it's kind of cool because it has, this big tower, and it's like a vending machine of cars. Cool and unique model, but I've got CarMax right down the street, which is a big parking lot where I can walk around and check them all out, take them for test drives. So it's just a novel spin on what CarMax is already doing. So, my attitude, it would be a resounding no. And I want to ask, and this is, again, I'm not going to be mean or anything, but I think, I'm going to end the poll. One of you said that you would buy it at these levels. Now, I would love to know, whoever's just put that they would, no hostility on my part. I'm just curious, what would cause you? Why would you buy that one, right? Why would you buy this piece? And you might be right. In the long run, you could be absolutely right, and the rest, 95% of us are absolutely wrong, and you were right in the long run. But I'm curious to know what would cause you to say, I'll buy that. I'll just tell you this. The only way that I would buy Carvana in this situation is if it was like, okay, I've got $1,000 or $5,000. That is absolute gamble money, and I'm going to take a flyer on this thing. But even that, you look at this price chart, and it really smells of a company going bankrupt. And I think what you're going to hear in the news here soon is, do they have enough money to stay afloat? What this price chart tells me is that they don't. Let's look at just the last 3 earnings announcements. So we go back to April of 2022. They missed earnings by 82%. They lost $2.89 per share. The next one, they lost $2.35 per share. The next one, which happened just in November, $2.67 per share. So they're literally losing more and more money every single quarter for the past year. So if you want to talk about trends, price is the trend, but also their earnings. I mean, every quarter they're losing. At a certain point, you got no more money left, right? So I would say that's it. Let's see. Mark says, CarMax is the largest dealer of used cars in the U.S., and they are national. Yeah, I don't know if Carvana is national or not. I've never really looked into them, but let's go see. 1 second. Let's bring up CarMax, which is KMX. And here's CarMax. So I think it's pretty clear that the whole industry's been suffering for a little while, but at least CarMax, granted, it was up $156 and it fell all the way down to a low of right around 54, currently trading at 65. So, I would definitely, if I had my choice, I'd buy CarMax. It just feels stronger, right? Rumor that Bridgewater is dumping their oil position. Okay, all right. I'm actually surprised they are backed by PIMCO. Wait, Jamie, you're saying that Carvana is backed by PIMCO? That would be interesting. I did not know that. I would think that they would probably go with somebody bigger. CarMax as mentioned here, is the leader in that space. If you look at CVNA, this looks dead. And what I think will probably happen, if you look at these fundamentals of a company like Carvana, CarMax is the juggernaut, and they have 2 choices. They could either let Carvana just burn out and die, right? Which will probably happen. Just judging by the chart, they'll probably file bankruptcy and do a restructuring of their debt. Or if Carvana can get down below its book value and become a buyable, a good value, it wouldn't surprise me to see maybe CarMax step in and say, we'll buy Carvana at such a depreciated level. And I don't know the book value ratio. Let's go here and look at Yahoo. My easiest finance sources. I'll bring up their finance page here, and thank you, Yahoo Finance, not sponsoring me at all. Let's go to CVNA. Look at old Carvana, and just curious what their book value is. You get below 1, that's an attractive buy. Now, of course, there's a lot of other factors there, but let's go see what the book value here is. Where is book value? Balance sheet. Book value is $259. Okay, so they still have a ways to go before they become a screaming deal for somebody like CarMax. But, judging by their trajectory, it could get there at some point here very, very soon. Vehicle service contract sales are on the rise. People are keeping vehicles longer. Yeah. Well, and part of that, Michael, is if you look at what happened 2 years ago, right? So when we went into this pandemic, we had what? Major supply chain shortages. We had the chip issues. So all of a sudden, you couldn't get chips. Cars weren't being produced, and you had cars that were going well over the sticker price. So I'll give you an example. My girlfriend and I, she was looking for a car because she just moved back to California, and she wanted to buy a Toyota 4Runner. So we went there and looked, and the sticker price, I believe the sticker price on the brand new 2020 4Runner was $41,000. She's like, oh, it's a little much. So we went out in the lot, and we saw a used one. They wanted like $39,000 for. Like 39, wait. Used with like 15,000 miles on it for 39, or brand new 2020 edition that's 2 years younger or 2 years newer for 41,000. So we were like, okay, we'll pay the sticker price. It's on the window, 41,900 and something. The guy goes, oh no, we won't sell those at sticker price. It's probably going for about $7,000 to $10,000 over that sticker price. But let me talk to my dealer. I'm like, well, that's false advertisement. You're saying on the sticker it's 41,000. So this is part of the problem, right? We had a period of time where the price of cars got so inflated. And I think when you have a boom cycle, you always have a bust cycle come after that. So to me, that is probably what we're seeing right now is the bust cycle for cars, which is great news for anybody who's looking for a deal in the next year or so, because the market may be flooded with more inventory. You're gonna have dealers that have been holding on to cars that they weren't selling at higher prices, now all of a sudden cutting their prices. So hold off. Wait a little bit. I was actually debating going and buying myself a new truck. But I'm like, you know what? I love my truck. It's 6 years old. I will keep it for many more years paid off. Merlin, won't they delist if their price is under $5? Yes. So it doesn't automatically delist. So what you're going to get from Carvana is an attempt to keep their price above $5. My guess is, let's just do this just for fun. I always like to do these little things because, one thing I like about at least my approach to it is if I say something, I like to check and see if I was right. I know a lot of people and traders who will say stuff and they'll never check again. So let's see. Reverse split within, 90 days. I think actually, let's go 120. Okay, so I say on this day right here, where that vertical line is, that 120 days from that point, we will see a reverse split. So these $5 shares, if it gets below, $5 and stays down there, gets to $2, $1, they'll do a, 5 to 1 or 10 to 1 reverse split. So all of a sudden, hey, it's back up to $20. All they've done is just done a reverse split. So they may do that as a tactic to keep their shares from being delisted, but Carvana clearly does not want their shares to be delisted. I don't know firsthand all of the timings for that. I think if it's under $5 for 30 days or 90 days, then they get delisted. So I'll look into that because it's been one that always is on the tip of my mind to go look up. But yeah, they can be delisted. But just if you look at the NASDAQ, there's a lot of stocks that are trading under $5. So, who's enforcing this? What's the deal? But Carvana's a fairly big name, and now they're kind of mainstream talk track for the markets right now. Would not surprise me at all to see them, the talk track about them being delisted. They'll do a reverse split, stay there. But ultimately, I think they're going to run out of cash. I just think that you looked at the last 4 quarters earnings, the last year, every quarter has been worse and worse and worse revenue. At some point, you're going to have no more money left, and they're dead in the water. Let's see. Will you wait 2 to 5 months for that, Toyota? You mean, would I personally wait 2 to 5 months if I wanted one? Sure. If I really want something, I'm fairly patient. This is something we talked about when we addressed psychology and trading. When I got started in the late 90s, I was not a patient person. I needed action right now. I needed results immediately. The older you get, I think, and I know we have some older folks in here, but I think maybe not just with age, but also with your trading experience, I think that the older you get, the more you realize you can't force things. You have to just have a plan in place, see that plan through, and let it happen. So I look at that as part of my normal life as well. If I'm going to be willing to buy a new truck, I'm in no rush. My truck runs absolutely perfect. Knock on wood. I got to knock on something. It runs great. Does everything I need. It'd just be nice to have a newer model, right? I don't need it. And this is part of the thing when I talk about the credit course, which I built for Online Trading Academy. You have these needs and you have wants. Do I need a truck when my truck is a new truck, when mine is perfectly reliable, runs great? No, I don't need one. It would be a waste of money, but it's nice to have new stuff. So will I wait 2 to 5 months? I might wait 2 to 5 years on that one, Mark. Yep, Liz, you're right. And of course, auto insurance rates went up. Yep, because the cost of replacement parts and because the cost of the base vehicle. So Adam, that was a long-winded response to your question. I would not. But again, I'm not a financial advisor. I can't tell you what to do with your money. We may look back at the show in 120 days and look back and be like, oh my God, Carvana's trading at $75 a share. And then you can point the finger at me and go, see, I told you. It is what it is, right? I'm okay to be wrong on this one. I'm just going by what that price chart tells me. And if charts could smell, like if there was a scent to charts, I'd be sitting here going, smells like death. Carvana looks like death. All right. Anyway, sorry for my theatrics there. I hope the microphone picked up the sniffing. I think we addressed this question, but it came back through, so maybe I didn't get to this one. And I'm going to repeat it. Scott says, what is the best thing to trade, stocks, futures, or Forex? Again, I apologize for the sexist comment, but it's like the old comment, well, what do you prefer, blondes or brunettes? All right, I can't say that one is going to be better than the other. Each one has their pros and cons. When I look at stocks, futures, currencies, hell, I even throw cryptocurrencies. Why not? Why isn't options in there as well? Personally, I would say that if I looked at the flexibility of a trading instrument, meaning the ability for it to be a chameleon and do everything that you could possibly want, there is only one asset class like that. That's options. Options are the most versatile, most flexible. You can make money in up, down, sideways markets. When it just literally does nothing, you can earn money and passive income from it. I think options, to me personally, are probably the best asset class. That said, you can't effectively trade options without understanding the underlier, because remember, options are a derivative on top of something. So it's in your best interest to know how to read price charts, how to look at this Tesla chart, for example, and say, okay, where are my supply and demand zones? What's the trend? How can I build out a strategy based off this price and then layer on my option strategy on top of it? So for me, I would say options are my favorite, even though I'm not as educated in options as I should be, and that's my own fault. I would say that the asset classes I'm the most educated in are going to be futures, Forex, and equities, because I've traded those for 26 years. And I love stocks. Stocks can be a little bit boring because, for the most part, you don't get all these massive moves. Why? Because you don't have leverage. When you're looking at futures, you look at options, you have leverage built into the instrument, roughly 10 to 1. If you're trading Forex markets, currencies, you have 50 to 1 in the US. You have 500 to 1 internationally. I mean, leverage is a great thing, but it can also kill you. Just ask FTX and the exchange there and Alameda Research, Bear Stearns, Lehman Brothers. Too much leverage can absolutely kill you if you don't know how to use it. So I love all of them. And Scott, to put them into kind of a spectrum here, I think that the most versatile asset class, without question, is, oh great, my watch is telling me where spectrum is. I gotta turn this thing off. I think the most versatile is options. From there, I would say futures markets, because within the futures markets, I have the ability to go through so many different asset classes. I can just trade the indexes like NASDAQ, S&P, Russell, Dow. I can trade commodities. I can go out there and be trading metals, copper, platinum, palladium, gold, silver. I can go out and be trading wheat, corn, soybeans. I can trade, so many different markets that may interest me. For the most part, most of us will probably stay with indexes, but some of you might be in agriculture, and hey, corn is all of a sudden your main interest. Great, good for you. From there, I would probably go, I hate to say this, I would probably go to stocks next, and I would put Forex last. And there's only one main reason why. I would put Forex as probably my least favorite to trade, because if you trade the spot Forex market, right, and that's trading things like USD, JPY, we talked about with David Warner yesterday. If you are trading the spot Forex markets, you're trading a fragmented market, right? One of the beauties of trading futures, you're going to a centralized exchange, right? If I'm trading, most futures, let's say S&P futures, trading off the CME. If I trade if I trade Apple, I'm trading on the NASDAQ. If I trade Goldman Sachs, I'm trading on New York Stock Exchange. I have a centralized exchange where all of that volume is recorded. Now, if you're trading spot Forex and you're trading the Euro USD on Oanda and you're got another person trading on, let's say, FX.com, you're getting different markets. You're getting different prices because they're standalone exchanges. They're their own market. It's very akin to what's going on with cryptocurrencies. I could find at Coinbase, Kraken, and Binance, 3 exchanges, I can find 3 completely different prices for Bitcoin. Why? Because you're trading against their order book. So that's the only reason I put FX at the bottom is it's a fragmented marketplace, which means your liquidity is not centralized. And you may be trading on a broker that you think is giving you a great deal, but little do you know that the volume and the amount of transactions happening on that exchange are extremely low. And you're getting slippage all the time, getting bad fills, maybe even they're trading against your order flow. That's the only reason I put Forex at the bottom. I personally think that understanding the power of currencies and understanding how it impacts one economy versus the other and how these things ebb and flow back and forth is critical to you. You have to know that stuff, which is why I love having people like David Warner on, and for me personally looking at a lot of the headlines for Japan and the European Union and the UK, figuring out how these dominoes are going to fall, because if Japan does something, their interest rates, it immediately is going to have an impact on global markets. How? Not exactly sure yet. Let's figure out what they did and how that might fall through and filter through to my trading here on US markets. So long-winded answer there, Scott, but I think they're all good and every person's gonna have a different perspective, but I would put options at number 1 because you can trade options on futures, you can trade options on stocks, which now gives you the ability to trade almost any market using options. Then I would go on down to futures, I'd go to equities, and then FX would be my bottom. Would you short a reverse split? No, I would not short a reverse split. It doesn't really do you any good, John, because if you short something, if you short a stock that you have 100 shares now, and let's say they do a 10-to-1 reverse split, you have 10 shares the next day, but it's at a 10 times higher price. So it really doesn't do anything for you. The only difference is typically if something does a reverse split, right? And let's go look at, I can't think offhand of a company that's done a reverse split recently, but if you look at CVNA, if they do a reverse split, most likely this trend is going to continue. The only purpose for doing a reverse split is psychologically. They want to get that price higher than $5, so A, they don't get delisted, and people don't go, oh, it's a penny stock, it's garbage. So I wouldn't short it personally. Now, let's say this thing does a reverse split, does a 10-to-1 reverse split. So Carvana currently trading at 5. Let's say they do a 10-to-1. It's now trading at $50. I might short that one, but you got to understand also, it's not as simple as, hey, I want to short Carvana, hit the short button. You may not be able to borrow shares of that from your broker, right? There is a hard to borrow list, and my guess is that Carvana will probably be on that list. You may not even be able to get those shares. Typically when they're penny stocks, it's really hard to get shares of those companies. So I probably wouldn't do anything with it, but no shorting it. Alan says, speaking of cars, what is the reasonable PE ratio? Oh, I don't know. That I don't know, Alan. You could probably do a historical study and go back and look at GM and Ford and Chrysler and see what those historical PE ratios are. But off the top of my head, I definitely don't know that one. Gives you more room to the downside. That's probably the only advantage. Correct. Exactly, Liz. That's why I was saying, I would never short anything at $5. Never. There's no way you couldn't pay me to short a stock at $5. It's risk versus reward. How low can it go? 0. So if I'm shorting something at $5, I have $5 worth of maximum profit. But if it goes against me, and let's say something crazy happens and they get bought out by CarMax, next thing you know, it goes from $5 to $50, I'm broke. I'll lose all my money on that one and then some. So to me, that's, I don't like shorting penny stocks. I like shorting things that are at a normal or a higher price that have a good trend down and more room to fall. I saw someone mention Lucid here. Let me go back to that comment. Where was that one? Hold on. I saw Lucid mention. Joe Frank says, same goes for Lucid. Smells like death or like a deal. Well, you guys remember we did a show, might have been last year, on SPACs. And I said, I think they're a blessing or a curse, right? For those who might be new, SPAC is a specialty purpose acquisition company. And what they do is it's a company that goes public, and their only purpose, they do nothing else. Their goal is to bring a private company public. So essentially, go out there, find some company that's not publicly traded, it's private, make them a sweet-ass deal to buy their company at a ridiculously inflated price. Both parties will make money. The SPAC makes a ton of money. The company makes good money, and now they're listed. The problem is the average person, you and me, who don't quite understand SPACs are the ones who get screwed. For every one SPAC that has succeeded and done incredibly well, I can probably show you 10 that have bombed and failed miserably. It's really it's a sucker's bet. It was great for a while, and I raised my hand because I bought into one because I thought that this company would do well. I'll show you that one here in just a second after I get a taste of this delicious Jefferson's whiskey. All right, so let's show you a couple SPACs here just for fun. Let's look at Lucid. Now, I'm going to start off by saying I like Lucid. I just saw a car. I was behind one yesterday or day before yesterday. I'm like, what kind of car is that? Kind of cool. So I put my glasses on, as I should be doing normally, and I'm like, oh, it's a Lucid. Nice looking, kind of a sleek lowrider sedan almost. Really kind of cool, wide body thing. I like the car, but my liking of somebody's product has no tie to the company. And I would agree with you 100% on this Lucid chart here, Joe. This thing is awful. So watch when you look at these SPACs here real quick. I want you all to notice over on the left-hand side of these charts, you see that SPACs typically start off at $10. And this is where they made the announcement that they're bringing Lucid public. Monstrous spike all the way up to $65. That's probably when the insiders sold their shares. Let's see what the volume looks like. Oh, look, all the big volume spikes happened there. Also happened on the way up, but now here we are at a lower value. Remember, $10 is kind of that line in the sand for these bad boys. Well, here we are at $8.68. So this does not look good for Lucid. It looks like it's going even lower. Hey, Lisa, good to see you. Are they Thomasina? I'd like to sit in one. I think they're really cool, but you know, they may have the most amazing product on earth. Doesn't matter. It doesn't matter. It could be the coolest car that's ever been created in the history of mankind. If they don't have money to stay afloat, we're going under. And you look at these price charts, it's actually kind of interesting when you look at this one. If I go back the last 4 quarters, they lost 43 cents per share, but then they lost again 64, and all of a sudden they beat earnings estimates. So they lost 5 cents. They beat earnings estimates again, lost 33 cents. They missed earnings and down 40 cents. So they have not made a penny. They're losing money every single quarter, and you can only lose money for so long. Ask any gambler, ask any business owner, you can only lose money for so long before all of a sudden it all falls apart and you don't have a company anymore. That's what it looks like with Lucid. You guys might remember the one I was in was Backed, BKKT. Check out this bad boy. So I bought it back here when it was it opened up at $10. I bought in here probably in April of 2021 when it was at $15, right? And I thought, cool, great. This was supposed to be an exchange, a cryptocurrency exchange for institutions. Of course, I was just wrong as could be, and it just kept selling off. I went all the way down to $8, and I was like, man, I'm down 50% of the thing. And I'm like, you know what? I'll just keep it. And I was very transparent with all of you. I was telling you at the time, I'm in this thing, it's going down, I'm just gonna keep it. I know, I apologize because I know some of you bought it because I bought it. And then all of a sudden it shot up. And I got out at $17. I made $2 per share, so it was $2,000. And then within the next couple of days, it shot all the way up to $50. And of course, I'm kicking myself going, I sold at 17, son of a biscuit. Well, look where it's at now, $1.68. I mean, this thing's probably going to zero. No one's using their product. It's garbage. And there you go. Trend is your friend to the bend at the end. Now, to your question, Les, and it's a great question, which I have as well. Notice how long this security has been under $5. It's been under $5 since April of 2022. So we're going on what, 8-9 months of under performance and under $5. They should be delisted. I'm not exactly sure why they haven't been delisted yet or haven't received a delisting notice. But if anything, this is going to have to do a reverse split here real soon to avoid being delisted. But show me other SPACs. Here's one. Nikola, remember this bad boy? Nikola now trading at $2.32. It's a SPAC. Was starting out at $10 way back here. So, I don't really know of a successful SPAC. I don't think I can name one for you. Speaking about Liz, I hear traders commenting about their daily line in the sand. What do you mean by LIS? A line in the sand? Oh, you mean for these specific companies? Yeah, I don't know. It's a good question. When you look at something like Lucid, what is their line in the sand? I don't know personally because I don't really look at the fundamentals that much, Pepe. But it's a good question. There, without a doubt, there is a number that if they get below this, they're done. a lot of these companies are actually taking their equity revenue, right, to help fund operations. That share price keeps dropping, you can go ahead and sell your shares. It's not going to sustain the business operations as it did when it was trading at 40 or 50 bucks. Now it's trading at $1. You're going under. So yeah, I don't know exactly off the top of my head. I know there's some things I do know. So for example, if you go out here to Bitcoin, let me just show you this. I think this is a funny one. You guys may know that, let me sort by symbol here. And MicroStrategy, Michael Saylor of MicroStrategy has, an ungodly amount of Bitcoin, and he's been leveraging and leveraging and leveraging. His liquidation price, from what I've been reading, is $13,500. So what does that mean? Well, that means that if Bitcoin gets below $13,500, MicroStrategy, MSTR, is going to be forced to liquidate their Bitcoin position. Right now, MicroStrategy is forming a beautiful descending triangle. It's gorgeous. It's much bigger than most. So there, I'll put that baseline there. I'll draw a line across the tops just so you guys can see what I'm referencing. That's a descending triangle. That is extremely bearish. And again, if Bitcoin falls below 13,500, they're going to be forced to sell their Bitcoin holdings that are using as collateral for a loan, and that could propel them even lower. So there are some things that I do know the line in the sand price, if you will, but I really don't follow it on companies. It's not something I pay too much attention to. My long-term holdings, I've been very transparent with all of you. Generally, my long-term holdings are not going to be individual stocks. Generally, I'm going to be in something that's diversified so I don't get caught by one security. I can't tell you the number of times over the last 26 years, I'll be in something, I've done the research, I was scouring through the financial statements of a company, I'm like, man, this thing is dog doo-doo, it's garbage, and I'm short that thing, and all of a sudden, boom, something comes out, and here's this white knight, or it was all a mistake, and it jumps up like 200% overnight and wipes you out. I don't want that to happen to me anymore. I mean, obviously, I'd love it when it's in my favor, but it seems all too often it happens when it's going against me. So I generally, long-term, I'm not going to be holding individual securities. The only thing that I would say is an individual that I like is commodities. So like gold and silver, I'm okay owning those things for the long haul, even though they're an individual security, really, or individual item. But typically, long-term stuff for me is going to be SPY, QQQs, or indexes that represent a specific market segment, so I don't suffer single stock risk. Just something that makes me sleep better at night, and just a personal preference. Nothing against stocks or individual securities, but it's just too much risk for me. Praying it stays above 13,000, Lisa. Part of me wants it to go lower, just to have a blowout in the crypto market as it's already had, and then potentially allow me to buy back much, much cheaper. Let's see. Singy says, you will never lose money taking profits. Yeah, I kind of agree with Liz. That's an old mantra. There's an old phrase that says, you won't go broke taking a profit. That's not exactly true. And Liz is right. She says, it's all about your reward-risk ratio combined with your win-loss ratio. Yes, so you could take a profit, but what if your profit is $1 and your stop loss is $2? You're going to go broke. So again, reward-to-risk ratio is a key, and then your win ratio on top of that. Once a recession hits home, Bitcoin will most likely break 13,000. Yeah, we'll see. I mean, I don't know at this point. I think that I'm not so worried about the recession, if you will, for cryptos. What I'm more concerned with is the fallout from FTX, Sam Bankman-Fried. Once we go to trial, you have a lot of liquidations for Celsius, Voyager, BlockFi, Alameda Research, FTX. There's massive liquidations potentially coming down the pipeline. So to me, that's the big unknown and wild card with crypto. It's not a recession. It's not a depression. It's not even hyperinflation. It's what's going to happen right now with those entities that are holding large amounts of crypto that may be forced to sell in bankruptcy liquidation. That's the big wild card. Ultimately, I'm looking at there's a 4-year cycle that's pretty evident and clear in crypto markets, and we're in the first year of it. First year is generally very, very bearish and down. It's happened multiple times in Bitcoin where the first year of a 4-year cycle, the markets drop 80%. Here we are, down 80% again. Then it'll go sideways for a year and a half, and then the last year and a half is absolute parabolic to the moon type of move. So sadly, I might have to wait another year and a half before this market really starts to rumble and roar. But the good news is I've been buying at some of these more depressed prices. And that's just basically going off of patterns and looking at history and cycles repeating themselves. Okay, so that was probably the longest-winded answer I've ever given to a specific question, which started off as, what's the best thing to trade, stocks, futures, or Forex? Which is part of the reason I love doing this show, everybody. I think you guys all can tell I love doing this show. It's just kind of natural, organic, and it flows. Maybe one day I'll pitch a show to somebody like Fox or CNBC and just call it unscripted. The show should be called unscripted because there is no script to this show. It's just go with it off the flow, and I think that makes it much more organic and natural and more fun. All right, let me just show you what's happening on Monday. And by the way, I forgot to mention, I will not be here Monday. I am going to be in Austin, Texas for a good friend of mine's wedding, so that's going to be exciting to go there. I will be back Monday, but not back early enough to do the show, and I probably not going to have the streaming strength to do a show live from the airplane. So my flight's at 1 out of, I think it's out of 1 out of Austin, Texas. So no show on Monday, but I'll be back on Tuesday, and I'm going to have Jerry Baldwin on the program. We'll talk about short-term trading of futures again. If you guys have questions for Jerry Baldwin or myself, let me know. Email me at TraderMerlin@gmail.com or put them down below any YouTube video. It would be pretty great to do a show live from the airplane. Hey, Airsoft Marine Sniper, welcome. First time I think I've seen you here. Subscribe, hit that like button for anybody who may be new to the show. I generally do the show every day, Monday through Friday at 2 p.m. Pacific, but as we get near the end of the year, I may be taking a couple days off here and there, but doing my best to entertain you guys on a regular basis. All right, let's look at your economic calendar for Monday. Even though I won't be here, if you look down here, really nothing going on for the U.S. markets. You have a 10-year bond auction on Monday. You also have a budget balance, but who really cares? Really, most of the stuff I would say that's important is going to be with the UK, which you can see the GBP coming out with their claimant count change, average earnings index, and unemployment rate. That will be on Monday night. Merlin, are you only doing this show for the money? You know I don't get paid for this show. I don't make any, well, I guess every now and again you guys contribute and I get a little bit of money from that, but that's pretty much just enough for me to pay the hosting fees for the podcast stream and website to keep that up. So basically I've got $60 a month worth of income that comes in just to pay for those bills right there. But no, I don't do this for the money. You know that, Les. More for fun. There was a good question. Said, if Merlin, if you win the lottery, would you still do this show? I promise you I would still do the show, but I would not do it 5 days a week, and I would probably do it from more exotic locations. I'd be showing you, hey guys, today I'm in Southeast Asia on the beach having a bucket cocktail. Let's talk about markets. So I would do it. But yes, I love doing this show. It's fun. All right, I think that's it. I didn't realize I would be this long into the program and have 52 minutes already under our belt. That is your trading week recap. Basically, most of the economic data looking pretty good. You did have the PPI numbers come out oddly before CPI, but PPI came out today. That did not look so good. And then the way we finished, not looking good at all. That really ugly show just kind of sell off right near the end. We'll see how that pans out when the futures markets open on Sunday night. But that's going to be it for me. I hope you guys have a fantastic weekend. Go do something fun. Live your life because you only got one. And those that say that you only live once, that's a bunch of crap. You only die once. Keep living every single day. Do the most you can. I will see. Yes, with my new identity, I'll do this show. All right, guys, have a fantastic weekend. Thank you so much. Email me if you got questions. Comment down below YouTube video. Hit that like button. Subscribe if you can. I will see you guys all on Tuesday. Take care, everyone.